Welcome back, everybody. We got to talk about the hot news that sent Baba up 10% because this company is not known to have wild, random fluctuations based on either exuberance or massive irrational fear, right? Am I celebrating this? No, I'm not. Do I believe that Alibaba is just going to go to the moon in the next couple of months? I have no idea. But we got to react to the news because, of course, news is news, and I'm a YouTube channel in finance, and I have to react to this. So why is Baba stock up 10% after it's collapsed almost 16% in the past year, and it's down 49%, almost 50% in the last 5 years? Why is this stock creeping up just a teeny tiny little bit? Well, this news came out that Alibaba, said Tuesday it will split its company into 6 business groups, each with the ability to raise outside funding and go public, in the most significant reorganization in Chinese e-commerce giant's history. So little Baba, Big Baba, is about to be a bunch of little Babas, because Alibaba is this massive conglomerate of like 20,000 freaking businesses, okay? There's a lot of sub-businesses that fall under Alibaba. Alibaba is not just one thing. I mean, think about like Amazon, for example. You got the Prime Movies, you got the e-commerce business. All these massive enterprises, both in China and in the United States and around the world, are obviously split into multiple segments. That's just kind of the nature of the beast when a company becomes freaking massive, okay? Alibaba is a massive company. And by splitting up, they're basically doing two things, okay? They're trying to make themselves more lean and efficient, which allows investors to buy individual parts of Alibaba that they may most want to buy. Because if you think about it, like, if you want to buy, let's say you like local services group, right? You like the food delivery service. That's just like the thing. You love the food delivery. It's the future, bro. Well, if you want to buy that, the way that Baba is currently structured, you would have to buy the whole stock. You would have to buy all the other crap, the cloud, the Taobao, the Kaino, however you pronounce that, digital. You'd have to buy all of that by buying the stock in order to get access to that food delivery service. But if they split up into different companies, which are all under the overhead of Baba, you can at least individually invest in something that you specifically want to invest in. So, okay, that's an advantage there. And on top of that, I think they're just trying to, be nice with the Chinese government, play nice with the Chinese government. Because if they split up into a bunch of different enterprises, right, then they're not such a big threatening monopoly that could potentially, topple the Chinese Communist Party. So that's kind of the idea there. So people are all excited about this, right? What is my personal opinion? What has changed, okay? I mean, it's the same company. It's just split up, okay? You take a pie, right? You cut the pie into pieces. It's still a freaking pie, okay? You can eat a piece of the pie, but the pie hasn't gotten bigger. The pie hasn't gotten more profitable. The pie hasn't gotten more amazing. Now, can Alibaba potentially realize efficiencies through this different structure? Yeah, 100% they could. Because sometimes working in a massive conglomerate or having a business within a massive conglomerate, there might be redundancies, inefficiencies, all sorts of stuff. So potentially there could be some, efficiencies that come out of this by having a leaner structure and having different components of the business be, I guess, more independent and be able to raise money. Totally get it, okay? And this may help Baba raise more money because, like I said, if somebody wants to buy food delivery service, now they can do it directly, and they may be more enticed to buy or invest or give this company capital. So it's a good thing, but at the same time, like, it's not something insanely crazy that, in my opinion, raises the share price of Alibaba by... Okay, well, for a second I thought I was like, oh, now it's 5%? Okay, so up 11%. And just to be transparent, like, I'm still down on Baba. I'm still down 29% on Alibaba. And it's going to be a long road before I even break even. So, does this really fix anything? No, it doesn't. Okay, so like I said, it's the same business. But Alibaba has had troubles. Okay, they've had massive troubles. Their revenue growth has basically flatlined. Okay. Their gross margin has been steadily trending down, steadily. Now, part of that's the pandemic, lockdowns, etc. But their margins are going down. Their operating margin has gone down. Their profit margin has gone down. And their free cash flow margin has gone down. Basically, every single margin has gone down. So while this company has been hammered by the pandemic and the Chinese Communist Party get mad at Jack Ma and just absolutely hammering all these tech giants. At the same time, there is a fundamental reason behind why Alibaba has suffered so much, okay? There are financial reasons that this stock has gone down. Now, can these be reversed? Absolutely, 100%. It's entirely possible that once China fully reopens, which they're basically in the process of doing, that the revenue comes back, the margins start to improve, etc., etc. And that will eventually, in my opinion, lift the stock price. But there are massive challenges that still face this company. And just by splitting it up, it doesn't address some of the huge risks, okay? Does it address the people's fear that the Chinese government's going to keep cracking down on enterprises? Kinda, not really, okay? Does it erase the fear that, this company is basically a shell company in the Cayman Islands? That's the only way you can buy the stock. No, it doesn't get rid of that fear. Does it erase the fear of the Chinese real estate sector collapsing? No, it doesn't, okay? There's still a lot of fears and a lot of fundamental issues that this isn't going to fix, okay? Now, if all the fundamental issues get fixed, margins improve, and the real estate sector turns out to be fine, the Chinese government loves businesses all of a sudden, and whatever, that could potentially improve the share price massively, which is kind of my thesis. But at the end of the day, this is nothing. Okay, so this is cool. This is amazing. Honestly, the stock's up. Wow, that's so amazing. Perfect. But it could crash the next day. Beijing could say one thing. Oh, Jack Ma is going to prison. Or they could, publish an article or something, some kind of announcement, and then the stock could go right back down. So don't become a moon boy and just think the stock's going to the moon because of this announcement. It's a typical day with Baba stock. Goes up, goes down, wildly fluctuating. That's kind of my thoughts. I mean, really, to me, it's really not a big deal. If I heard that the Chinese economy doubled its GDP growth rate and the Chinese government, was sincerely behind private enterprise, okay, maybe I'd be more excited. But this is just taking a pie and splitting it into pieces. So that's kind of my thoughts. I mean, I'm going to continue to hold the stock. I think I can potentially make money. And at some point, when it gets to the share price I want it to be at, I'm going to sell it and put it into VT. And that's basically it. All right, hope you enjoyed the video. Hopefully you learned something, and have a wonderful day.